this video, we'll be talking about the trend trading. So, how you can use trend lines to trade for your gains. So, in this small video, we will be using this trend, and based on that, we will be making a trade. So, I've done some trading and back tested this strategy quite a while, and right now I did for this as well. So, here you can see my trades. So, first of all, you have this trend line, so we will call it as a trending resistance. So with trending resistance, you will have this choppy condition, and when the market, let me just remove these lines. Okay, so you'll wait for the trending resistance to be crossed with the body. So normally we have four touch bases. So the first one is the body touching, or it can be wick as well. Then we have the wick itself. Then we have another, and then finally we have a body closing above this trend line. And when it happens, it gives confirmation that the market's gonna uh, break this trend and will go over this price action. So, well, it needs your active awareness of the market, but you can also do one thing. You can just add an alarm. So you will click on this, and you will find this option to add alert. So with this trend line, you just can select crossing, and you will be alerted when the price breaks this. I've done the same with this trend line as well. So whenever it appears here, we'll be making our trade again. So with this, now we know that the market has broken this trend line with a bullish engulfing. This is a, a good, you can say, it's a good confirmation. So we'll do this. But for the extra confirmation, you have to wait for this to for this structure to break. So this is what we call breakout structure. Right here, we will have our final trade. So here we'll take a long position. So this will be our. So once we know that it has broken, we will take our trade here. And now the another question appears that, so we know that the market has broken this trend line, and it wants to go up from here, but how long? So how far the market can go? So how do you do that? You will take this, for instance. So the first candle that tries to penetrate the trend line with the lowest wick, and you with this lowest body of wick. So here we have a body, and we'll just use it with the candle which broke the trend line, and we'll add that as an area of reversal. So here first we saw that the market reverses from here, then finally we will double this. If the market does not stops here and breaks this demand as well, we can say that it will double itself. So now we'll double this demand, and here we are with the final demand, and right here we got the final reversal. Just a second. Fine. So here is our retest, and the same goes with this as well. So we have the lower trend line here, and I have the alarm set up here, so alert set up here. So if it breaks this trend line, I will be alerted, and then I can take a trade from there. So this is how you will take the trend lines to take a trade for yourself. So here we have almost a 1:10 risk reward. So it's a nice trade So you can use this strategy for yourself as well. And this is one of the DMF concepts, that is the dual market framework. This is one of the core accurate concepts I teach in DMF. So yeah, this is it for this video. It's just about to use trend lines for taking a trade. So it works hell a lot, and you can take a trade for yourself as well. So let's take another trend line as well. Let me find a good example. Yeah, this is one. So here we have this trend. We'll just add it up here. So we have this trend line, and we will see how it's working. So here we have the volume burst, and then the market is retesting this. And we'll check for the SR interchange. So right from here, we will, and then we'll use it from this demand. So this is the volume burst candle, and here we will have our reversal. There's some still. Okay. So we'll use the first touch point for the reversal, and we have this volume burst candle right here. Let me just trade this out. Here is our reversal, first reversal. But the market is actually in the volume burst. You have to be accurate with the trend line, so we'll use one thing here, and let me just remove this. So if you're not good with the trend lines, we'll use this William fractals to make an accurate one. So, and we'll change this to 20, 25 even. Yeah, now we are good to go. So we will take this. This is how it should be. Now we're good. Now we'll look for the SR interchange from here till the lowest one. We are good to go. Let's move this. Move this as well. So, so this is the price action that's breaking the trend line. So we will use it. Yeah, sorry. And here is our final reversal. As you can see, after the volume burst, we have this area reversal. Exactly, if you can see that, we have this, we are seeing the weakness of the market, and here we are having the reversal. So this is how you're gonna use the trend line for yourself. Let me show you with another example if I can find it. So if you're using with William fractals, it will give you accurate results. So with this, see, we had the first William fractal right here. This went pretty accurate for us. This will be our. So with this, we'll do the same. We will calculate the SR interchange and we'll use it for the William fractals. And this will be our final area of reversal. So with the major one, we will get the smaller ones as well. So here we got the smaller one as well. So this was the major trend line, and a part of this we got the minor trend line as well. So this is our final area of reversal. So yeah, this is how you can do things with the trend line, and it works a lot. Also, you can see the market structure as well. So we have a W here. So we had our first W, then it was an M, then we can see another W, then we have another M. So the W is smaller than the M. This is how you can understand the market structure as well with the trend lines. Sorry. Then we have this W, continuing W, very choppy one, and then we saw this. So Ws are getting more dominant in the market than the Ms. So this is just to give you instance of how the market is working. So you want to do this as well to know the double and the central demand as well. So sometimes the demand will be just one, and if the market is in bullish mode, then it will give you double demand as well. So here, if we get 3 times of it, this is what the 3 times as well. So you can either get just one time, the second, and the third wave as well. So you can just do this with Elliott wave. So here we have the first Elliott wave, then we have the second, and then we will have the third. So yeah, this is for it, and I've seen it working. I recommend you using that as well, using this concept as well. And if it helps you in any way, you can like this video and subscribe to the channel. Thank you so much for watching this video, and we'll be back with another one. Have a great day.